All right, let me hit you with this in the first 20 seconds. Underscore, a US AI company just closed a $65 billion funding round. Slash, that's not the crazy part. They're now worth $965 billion. That officially makes them more valuable than OpenAI. This is Anthropic, the company behind Claude, and they just told the world they're about to flip the switch on real profits for the first time. Their Q2 revenue is projected to more than double to $10.9 billion. Think about that. While everyone's been fighting over who builds the best AI model, Anthropic quietly built the best AI business. This story dropped just 3 days ago, May 28, 2026, and it's rewriting the rules of the AI gold rush. Today I'm breaking down exactly how they did it, why investors threw $65 billion at them, what this means for your money, and the 3 lessons any founder or investor can steal from their playbook. Stick around because Scene 3 has the exact strategy they used to outgrow OpenAI without burning cash like everyone else. This isn't just news. This is a blueprint. Let's set the stage with context because the numbers here are insane. Anthropic raised this $65 billion Series H round led by Altimeter Capital, Dragoner, Greenoaks, Sequoia Capital, Amazon, and Alphabet. That pushes their valuation to $965 billion. For perspective, that puts them as the 5th most valuable US startup ever, right behind SpaceX and OpenAI. But here's what separates hype from real business. Anthropic isn't just raising money on a dream anymore. They announced Q2 revenue will hit $10.9 billion, more than double last quarter. And they expect to turn an operating profit for the first time. That's the moment every investor waits for. When a company stops bleeding cash and starts printing it. The core product driving this is Claude, their AI assistant that companies are plugging directly into workflows. We're talking NASA, Goldman Sachs, Mercedes-Benz level clients. They're not selling toys. They're selling infrastructure. And infrastructure scales. This is why Amazon and Alphabet both invested. They see Claude becoming the OS layer for enterprise AI. But how did Anthropic beat OpenAI to profitability? That's where it gets tactical, and it starts with one decision they made 18 months ago. Ed1BB9873440. Here's the play Anthropic ran that OpenAI didn't. They focused on enterprise reliability over consumer virality. Underscore, while OpenAI chased ChatGPT headlines and API credits, Anthropic built Claude for one thing. Zero hallucination contracts for Fortune 500 companies. They broke AI reviews into 400 separate tasks instead of one big guess. It sounds technical, but the business impact is simple. Banks and hospitals can't afford AI to make stuff up. Anthropic guaranteed accuracy, and that guarantee let them charge premium prices. The result? Revenue run rate exploded 50% month over month for 6 months straight. They also locked in multi-year contracts early. That means predictable cash flow. Investors love predictable cash flow. That's why this $65 billion round happened. It wasn't charity. It was math. The lesson here for anyone building an AI, SaaS, or even content is brutal but clear. Pick a painful problem, solve it 10x better than anyone, and charge like you mean it. Anthropic didn't try to win the internet. They tried to win the CFO, and CFOs signed checks with 9 zeros. This is how you scale to $965 billion without needing to go viral on TikTok. 27B83440. Now let's talk money. What does a $965 billion valuation actually mean? It means Anthropic is now worth more than Netflix, Adobe, and Nike combined. It means the investors who got in early are sitting on returns that make crypto look slow. Altimeter, Dragoner, Sequoia, Amazon, Alphabet. They just secured a seat at the table of what might be the most important infrastructure company of the next decade. But there's another angle here. Profitability. Anthropic says they'll turn operating profit in Q2. In the AI world, that's rare air. Most AI labs are still in the burn billions, figure out revenue later phase. Anthropic flipped the script by selling to enterprises who pay upfront and pay big. $10.9 billion in one quarter proves the model works. This is why the $65 billion raise matters beyond the headline. It's validation that AI can be a real business, not just a research project. For retail investors watching from the sidelines, this is your signal. The AI trade isn't just NVIDIA chips anymore. It's the companies turning those chips into dollars. And Anthropic just showed the world how to do it at scale. Ed1BB 987. So what happens next? Three things. First, expect Anthropic to expand Claude's reach aggressively. They said the funding will go to meeting demand, continuing research, and expanding the tool. Translation: more sales teams, more data centers, more enterprise deals. Second, competition heats up. OpenAI now has a clear rival who's profitable and growing faster on revenue per employee. That forces both companies to build better products faster. For users, that's a win. Third, this resets investor expectations. The AI is a money pit narrative dies here. Anthropic proved you can build frontier AI and make money in under 3 years. That opens the floodgates for every other AI startup to raise bigger rounds if they can show real revenue. The ripple effect will hit stocks, private markets, and even your job. If your company isn't using AI agents yet, they will be in 6 months. Because CFOs just saw the proof that AI can actually cut costs and boost margins. This $965 billion moment is the tipping point where AI goes from experiment to necessity. Ed1B. Let's bring this back to you. Whether you're an investor, founder, or just someone trying to stay ahead, there are 3 takeaways from Anthropic's $65 billion win. Number 1. Solve for the buyer, not the user. Anthropic built for CFOs and compliance teams. Boring, but profitable. Number 2. Price for value, not competition. They didn't undercut OpenAI. They charged more because Claude was more reliable. And number 3. Cash flow beats hype every single time. A $965 billion valuation means nothing if you can't turn profit. Anthropic can. As of May 28, 2026, this is the new standard for AI success. The race isn't about who has the smartest model anymore. It's about who has the smartest business model. If you want more breakdowns like this on AI, money, and how to spot the next $1 trillion company before everyone else, you know what to do. This story is just starting, and Anthropic just showed us the playbook.